If you can get 5% in cash, then why would you ever want to invest in the stock market? Well, stick around to the end of the video and we'll find out why. Remember, if you do enjoy our content, like, comment, and subscribe to the YouTube channel. We love doing these videos for you. In today's episode of Ask Team FG, we're going to be taking a look at cash. And there's a pretty high interest rate when it comes to cash right now. It's close to about 5%. And that's directed a lot of investors towards cash-like products or short-term products. However, is that the best interest for investors for the long term? Well, Carlo, why don't you start off why it's not?
Thanks, John. Exactly. Let's preface this video with this is for long-term investing. Correct. And why cash is not the right vehicle to be using. And why is that? Because cash earns less than the stock market. The evidence shows that in all the research that's been shown, cash over the long term does not earn as much as the stock market will. Mm-hmm. And obviously, being in the stock market, it comes with risks, but you take on those risks for those higher rates of return. With cash, you get minimal return on that money. So if you have a plan in place and it requires your portfolio to earn at least 6-7%, you're already going to underachieve that by holding cash in your portfolio. Although 5% may sound like a high rate of return on your cash, you will be achieving a higher rate of return in the stock market long term.
That's a great point, Carlo, and that's why we do invest in stocks in general, because that is a way that we can outperform the rate of inflation. At the end of the day, that's the most important thing when it comes to investments as a whole, is you want the value of your assets to continue to grow above the rate your expenses are going to continue to grow year over year. And the way that works is when you're investing in all these companies all over the world, if cost of living continues to go up, that means these companies are charging, higher fees for their service. You've probably seen it even in the last couple of years. Grocery bills have gone up. Anything that you're looking to purchase since COVID has gone up in price. Well, these companies now, their valuations are going up as well because now they're gaining better revenues from increasing their costs associated. So if you're just investing in the global stock market as a whole, you're going to continually grow with that rate of inflation and even up and above that rate of inflation as well. And that's the main objective. How can our return get above the rate of inflation? You can't guarantee that with cash. Although it's great now in the short term, we've got a pretty good high interest rate period where cash is paying you 5%. We can tell you over the 10-year plus period, the stock market's going to outperform that rate of inflation over a 10-year period as well. You can't guarantee that with cash. So again, if you do have long-term goals, that's why we tend to direct people towards the stock market as a whole.
There is a time and a place for cash.
Correct.
Like I said earlier,
Correct.
An emergency fund. We often talk about wanting to have 3 to 6 months worth of living expenses sitting in cash, readily available for you to use in the case that your income is no longer there. Cash is the perfect opportunity or the perfect place to hold that money. And when it's paying 5%, you're doing even better.
Exactly.
So that's our episode for today. Again, if you do like our content, please do subscribe to our YouTube channel. Provide us with a comment. Do you hold a significant amount of cash? Are you enjoying that higher rate of return? If that money is for longer term, you should be getting it into the market. Until next time, I'm Carlo Cancino.
I'm John Yocconetti.
And this has been Ask Team FG.